Good morning to all traders and welcome to today's market insights video provided to you by Orbex. It's Tuesday the 31st of March today. It is the last day of the month and a last trading session for the month. So we've seen yesterday some movements that they are, in my opinion, owed strictly to end of flows, which is pretty much rebalancing on portfolios. We've seen the indexes moving a little bit higher, and that has probably to do with rebalancing of portfolios, given of course also the fact that we've had the Chinese PMIs overnight and they were positive, which seems to suggest that now that China is getting back, people getting back to work, then the country seems to be getting back on their feet as well. And that is a good sign for the other countries that are still of course struggling. However, I would be very cautious with this upside move because I think it is a mere correction. Before we go on to the indexes, the equities indexes at least, I wanted to go ahead and start with the US index today, okay? The US index we explored last week. We were talking about this ABC correction potentially coming into play, right? With, wave C, coming through now. We've had 1, 2, 3, 4, and 5, and then a correction for wave B, and we see this as now, since this is wave A, obviously, we see this wave C as an impulse as well, which seems to suggest we're going to get 1, 2, 3, 4, another move to the downside for 5, potentially to the 97 or so, then wave 2, 3, 4, and 5. Now, we could get wave 2 as an elongated one, and then 4 as sharp. And that I only say because we are near price action over here, okay? This is a higher activity area than this is, so it could potentially turn out to be a more elongated wave 2 rather than wave 4, right? Now, of course, this could turn out to be a more complicated pattern, right? So we might get an invalidation of this move to the downside. That invalidation will come through only if we would get another move to the upside that would break above that level. So unfortunately, although it is far, it would be the only valid invalidation at the moment. Now, on the S&P, and this will be the case with NASDAQ and also the Dow Jones that we're going to explore very, very soon. We talked about ending this cycle degree move to the upside, the impulse over here, right? 1, 2, 3, 4, and 5. Now, there is two ways we can see this through, right? One is that we've had A, B, and C, which means we ended down here with a correction, and we're going to start moving up 1, 2, 3, 4, and 5, because this move indeed looks corrective, right? It looks impulsive in the short term. It could turn out to just be an ABC, and we could continue lower. Okay, that would take us around the 17 level. This is the one particular scenario that I am more a fan of, to be honest, leaning towards, because I don't really think we've seen the worst of the coronavirus yet. There is still countries peaking. In the US as well, obviously cases are increasing, but I don't think we've reached a peak yet. Now, with that being said, I see that we're going to get a correction up to anywhere between the 29, 28.50 maybe, then 26 over here, this area, and then continue lower to take out the 1700s and even lower. That would depend actually how investors are going to react once we start seeing the economic once they start seeing economies improving. Now, the situation with the NASDAQ and the Dow Jones isn't much different, okay? But I just want quickly to go on the charts here as well to show you what I see. Well, pretty similar patterns in all of them, right? We ended up here. Now, again, we see this as an ABC again. Now, this B move, 50.61, anywhere between these retracement levels, 82. We're looking at 82.60, 86. We could even just end it over here, you know? We don't know that. This is 38.2. And from here, we can start looking for prices again to move lower. Now, if we move higher, we really need to look at both, actually the Dow Jones as well, and the NASDAQ and the S&P. We need to look at wave one and to consider this as an impulsive move to the downside, despite the fact it's an ABC, because ABC is an impulsive correction. So, but even if we dip a bit below that, below wave one, it wouldn't make a difference, but it would maybe put us a little bit in an uncertain situation, because then prices could go either up or down following that move, right? So, but a wave one invalidation, okay, would be quite bearish on the medium and longer term, right? And we're looking here for 53.70, even 43.40, which is the 50 and 61 Fibonacci extension retracement levels from the longer term, from a longer term perspective. Now on the as you see here, I have actually labeled this as an ABC. Okay, it looks more of a corrective pattern, to be honest, although I mean all of them could be similar, to be honest. However, I just wanted to show you how labeling can change depending on a certain moves, certain patterns that seem to suggest that an upside move could be corrective as well as impulsive, right? Now, the case here isn't different, right? We've had wave one done here anyway. We're looking at a correction right here. We actually corrected like 30% or 40% or so from the top. Now we still have some room to the upside. We can go up to 24, even 25, 30, right? And then start moving lower again. That, however, would be wave four for the Dow Jones, right? And from here, we are gonna get a very good impulse to close above the previous low and to take finally out the 30,000 psychological level.